Are you covered if your house gets damaged during a riot? What about your business? Most people assume riot damage either isn't covered at all or needs a special endorsement added to your policy. And that assumption makes sense. Riots sound like total chaos, like a scene from a blockbuster disaster movie where everything spirals out of control. They feel like the kind of event insurance companies would flat out exclude. The word riot alone carries serious weight. So when you watch news coverage of civil unrest or protests turning destructive, it's natural to think standard homeowners or business insurance won't cover the fallout. But that assumption is wrong, though it's wrong in a way that truly matters when push comes to shove. Standard property policies actually do cover riot and civil commotion. It's explicitly listed as a covered peril in most homeowners and commercial property policies. It's not an add-on or optional, it's already built right in. Here's the real plot twist though. Simply knowing it's covered doesn't equip you for how claims unfold in the messy reality of civil unrest. Coverage on paper is one thing, but the practical side, like what triggers it, the limits involved, and the timelines can make all the difference. One quick caveat. In high-risk areas prone to repeated unrest, some policies might include exclusions or tighter limits, so always review your policy with your agent to be sure. Let's ease into this with a simple home scenario. Picture yourself at home on a quiet Tuesday evening when a downtown protest grows larger than anticipated. By nightfall, parts of it turn destructive. You're several blocks from the epicenter, but a splinter group veers into your neighborhood. A brick shadows your front window, spray paint tags your garage door, and you hear similar chaos at the neighbor's house. Within 20 minutes, the group moves on and law enforcement shifts focus elsewhere. You call the police to file a report, and the next morning, you're dealing with glass scattered across your living room floor and a damaged window frame. You document everything with photos, reach out to your insurance agent, and explain the situation. They guide you to file a claim, and it's pretty straightforward from there. Riot damage falls under your homeowner's policy just like fire, wind, or everyday vandalism. The window gets replaced, garage door is cleaned and repainted or fully swapped if necessary, with dwelling coverage handling the structure. If shattered glass ruins your furniture or spray paint hits stored belongings, personal property coverage steps in there. And if the damage makes your home uninhabitable, additional living expenses could cover temporary hotel stays or extra meals during repairs. At its core, this is direct physical damage tied to a clear event, and your policy doesn't distinguish between a riot and other forms of vandalism. The cause doesn't alter the coverage outcome. The claim gets processed, you cover your deductible, and repairs proceed smoothly. That's the baseline for most home-related riot damage. Now, if you're a renter instead, the same principles hold. Your renter's insurance protects your personal belongings and liability much like a homeowner's policy does for contents. The landlord's coverage fixes the building itself, while yours handles your stuff and any additional living expenses if you're displaced temporarily. Things get more layered and honestly more intriguing when we shift to businesses. Imagine you run a small retail shop right in the heart of downtown, where a protest escalates into a riot. The front window gets smashed, looters force their way in and snatch merchandise, and a small fire in the back is quickly contained, but still wrecks some inventory while spreading smoke damage throughout. By the time authorities regain control, your store's a wreck with maybe $15,000 in lost stock. The physical damage is covered under your commercial property policy. The broken glass, fire effects, smoke issues all qualify. Theft during a riot? In most cases, yes, as long as there is evidence of forced entry and no restrictive sublimits. It typically falls under business personal property coverage. Since riot and civil commotion is a named peril, you file the claim, collaborate with the adjuster, and the direct repairs get sorted. But this is where "it's covered" starts feeling like only half the story. Say the damage strikes on a Thursday night. You've got shattered glass, lingering smoke, and vanished inventory, so reopening Friday is out. And likely the whole next week too, while you handle replacements, cleanup, and restocking. 2 weeks offline means zero revenue. Yet fixed costs like payroll if you're retaining staff, rent, utilities, and loans keep piling up. That's when business interruption coverage comes into play, designed to replace lost income during shutdowns caused by covered property damage. Since the riot led to qualifying physical loss, it usually applies here, covering the period of restoration, the reasonable time needed for repairs. However, if your building escaped direct damage, but you're still closed due to a citywide curfew or restricted downtown access, that's a whole different ballgame. It shifts to civil authority coverage, which has its own rules, often including waiting periods like 72 hours and lower limits overall. To trigger that, you typically need 2 elements: damage to nearby property, say within a mile, and an official government order blocking access specifically because of that damage. It's not the riot itself that activates it. It's the order tied to the proximate destruction. You can see the nuance emerging. Coverage is there, but pinpointing what exactly caused your closure determines which type applies. Confuse business eruption with civil authority, and you might face unexpected gaps thanks to varying deductibles and sublimits. Add another layer if you rent your business space rather than own it. In the same riot setup with damage and looting forcing a shutdown, the building owner's policy covers the structure while yours protects contents, inventory, and interruption losses. But your reopening timeline hinges on the landlord coordinating fixes, and if multiple tenants are impacted or contractors are overwhelmed across the area, what starts as 2 weeks could drag into 6. Business interruption still applies during that reasonable restoration period, assuming due diligence, but it's not indefinite. It won't stretch endlessly for backlogs or supply shortages. Policies cap it by dollar limits and timeframes, often up to 12 months. These are built for isolated incidents like a single fire or burst pipe with predictable fixes, not widespread riots that strain resources citywide. The coverage functions, but the key is verifying your limits align with potential mass event scenarios. Finally, let's talk about the proactive side, because prevention beats surprises. Suppose your home is in an area with periodic protests. No damage yet, but you're worried. You ask your agent about riot coverage, and they confirm it's included. You breathe easier, but if you skip questions on deductibles or limits, trouble brews. Damage hits, $3,000 total, $2,000 deductible. You're covering most out of pocket since it barely exceeds. Or for your business, a separate higher deductible for vandalism or malicious mischief, sometimes how riots are categorized. Or sublimits on inventory types, slashing your expected $75,000 coverage to just $15,000 for stolen items. Double ouch. The bottom line, coverage exists, but grasping the details, how it applies, your out-of-pocket share, and the actual amounts available is crucial before any incident. Just hearing it's covered doesn't reveal the full financial picture. So, what turns a riot claim from straightforward to complicated? First, direct physical damage versus indirect losses like access restrictions. Direct taps property and business interruption. Indirect relies on civil authority, often with slimmer limits. Second, repair timelines, and whether your interruption or ALE coverage holds up during widespread delays when everyone's competing for contractors. Third, the policy nitty-gritty, deductibles, sublimits, waiting periods, interruption time caps, and precise civil authority language. These are in every policy, yet most folks overlook them until a claim's filed. The myth that riots are not covered stems from a logical hunch that such disruptive events must fall outside standard terms, but they don't. Policies include them. Still, awareness of coverage alone does not prep you for claim day realities, payout amounts, activation triggers, duration, and your ultimate responsibility. To assess your own coverage for riot risks, don't just confirm the perils listed. It is. Dig deeper into your deductible and overall limits. Business owners, scrutinize business interruption for its time frame and any waiting periods. Examine civil authority for exact triggers. Ensure property coverage reflects current replacement costs, not outdated values from policy inception. Pro tip, loop in your agent. They're pros at decoding this stuff. I create videos that break down how insurance really works, stripping away the marketing fluff to get to the practical truth. If this cleared things up, hit that like button, subscribe for more insights, and turn on notifications. What's your top insurance question? Whether it's about riots, deductibles, or anything else, drop it in the comments. I might feature it in a future video. Thanks for watching.